Now, what's interesting about this is that it might stay that way, because what we've seen in New York is the New York sweet crude price falling to 37. And this morning at that time, we still had Brent above 40. So there's usually about a $2 difference between the two. And New York leads the way. So we should have expected the Brent crude price to follow suit and also fall. It's mainly a situation that comes out of the Chinese trade figures. Now, isn't this ironic? Last, was it beginning of October, I think it was, the Chinese government devalued their currency and promised that the next trade figure for the quarter would be better. Well, that promise, don't know why they made the promise in the first place, because it's turned out to be quite different. November's trade figure suggests that for the quarter this year, final quarter, we're not going to see any improvement. And China is doing a lot less business with the rest of the world, which means, of course, that the rest of the world has got less to trade with. And so we see commodity prices falling, oil included, and, of course, commodity currencies, rand, trading at a record low. Let's take a look at our indicators. We have got negativity over in Europe, FTSE down 0.6, the same for the CAC and the DAX. Joburg, all the way down by 1%. On the Aussie, financials down by 0.7 and industrials by 0.5%. Resources have lost 5%. That's no doubt the Chinese effect. Gold mining is up a bit though by 0.4. Platinum miners down 4.1%. Now gold miners gaining because the gold price is slightly higher thanks to this risky situation we're in. Whilst platinum at 862 is an improvement from this morning. It was 857. $39.90 on oil. 14 Rand 59 for a dollar, 21 Rand 88 for a pound, 15 Rand 83 for €1. And then BRICS versus the Rand. China yuan is now 2 Rand 27. It was 2 Rand 25 yesterday. The rest unchanged. Okay, we're speaking to Maudi Linswani from Lehumo Capital. Welcome, Maudi.
Thank you.
Let's start off with the Rand. It's been a bit resilient recently, but that's now come to an end. So where are we going now?
Yeah, look, it was bound to come under pressure. You know, we've seen since the beginning of the week, you know, when all this negativity came through. In fact, from Friday, when those rating agencies published their reviews for South Africa, negative, you know, downgrade for South Africa. You know, the outlook, particularly, which was a surprise, not a surprise as such, but which was something that we probably thought it might not happen, which was Moody's and S&P, you know, downgrading the outlook to negative from stable. Fitch was expected to basically downgrade it. But I think what was a bit of a surprise, perhaps, was those two rating agencies who now moved us to a negative status. So that impacted negatively on the rand, and I think it took a while to actually price in. The market is continuing to price that in. But of course, we've had other negative, you know, news out of China. You know, the trade data that came out, poor trade numbers from China. So that's also impacting negatively, of course, on the rand. But also, the third one was the South African, you know, the budget, the deficit, the current account deficit rather, that came out. 4.1% of GDP in the third quarter from 3.1. So that's widening even further and putting more pressure onto the currency. And of course, you've still got the Fed meeting next week. So it looks like the rand is under pressure at the moment, and it's going to continue to remain under pressure for some time.
What about the oil price? I mean, that's falling. So the question is really, will the rand weaken further than the oil price? Because that depends whether or not you're going to pay more for petrol. No,
most certainly. So you've got the oil falling, and that's not really translating into positive for the South African, because you've also got the rand weakening on the other side, offsetting whatever benefits or, you know, positive that has been generated or that has been brought about by the fact that the oil is falling. So on a net, the net effect of that is that it's probably even negative if you take into account the rate at which the rand is weakening versus the falling oil price. So we're not getting the benefits because of the falling rand.
Let's talk about something more specific. Anglo American came out with a massive restructuring plan today. The market, of course, seems like it didn't like it, but then again, everything else is down as well.
Yeah, most certainly. I mean, the whole sector down 5% almost, the resources sector, that is. And you look at it, it's a radical, overhaul. The massive restructuring that they've embarked on. On balance, it's a good thing. However, you've got to look at it, as to what is the real cost. The reality is that, those announcements or the measures that they've put in place, which is, the reduction or the suspension of the dividend, they're cutting, they're selling some of the assets, they're restructuring the whole organization. It's a good thing for the business. However, it's going to take some time to really see the benefits of that. It's a good thing for the organization to really be doing that. Particularly, you'll be worried if a resources company would come out today and come up with a trading update and say they hoping that their only hope is that there's a recovery in the commodity prices.
Yes, yes.
However, what they're doing something which is in their control. They say tough times calls for tough actions to be taken. And I think the management there is to be commended for the actions that they're taking. Hopefully we can see those sort of benefits starting to kick in.
2016 is around the corner, so I'm wondering what your outlook is, and more particularly, which sectors do you think will win and which will lose? And if everyone loses, who's going to lose the least?
Yeah,
Let's put it that way.
It's a very difficult one to answer, but I think probably what our expectation is that we're going to continue to see a very subdued market overall. However, there will be a couple of sectors that for us will perform better. I think you look at the rand hedge stocks; those are sectors that will probably do very well. But also the consumer, more consumer, related stocks, where the companies that produces the necessity, as opposed to goods that people can live without. So I think go for companies that many consumers can't live with. They cannot live without. Your healthcare businesses will probably be some of the ones that I pick going into 2016. Some of the food retailers will be some of the ones that I'll probably put in my basket. The resources for me, I would definitely continue to avoid. We're going into 2016 where we're expecting the Fed to actually start hiking interest rates next week. And I think it will continue to be like that. We'll continue to see that divergence in monetary policy between the Fed and the ECB. So the rate hikes in the US will continue to put more pressure on the commodities. China will continue to put more pressure on the commodities. So that's a sector for me to continue to avoid.
Now, what about the luxury sector, or shall we say where the wealthy shop? Do you expect wealthy people to start downgrading?
I think we've already seen it, and I think the most of the consumption, particularly in the wealth space, used to come from China. But even that particular market is starting to feel the pinch because of the fact that China is under pressure. The likes of Richmond they were doing very well. There's a slow recovery. However, it's not to a point where I'm actually confident to say let me move in. Even the rich do get impacted, particularly in these tough times. Perhaps not at the same rate as the poor, but they do feel the pinch of a sluggish global economy.
Thank you for your time, Mauri.
Thank you, sir.